John, let's talk about some of the news dominating Canada's real estate landscape. First up, the September announcement by the Bank of Canada with respect to the increase in the overnight lending rate. We've already seen a cooling when it came to the housing market. What is that impact now to real estate?
Yeah, I don't think this change is going to have a material impact. I mean, and that's not a bullish statement. I just mean, the market's already at a 20-year low in sales. I think this interest rate increase is kind of priced in. People were expecting it. So I expect the market to remain relatively sluggish. I don't think this is going to cool demand significantly further. We're probably going to stay at pretty low levels of sales over the next 6 to 12 months.
But let's get into now what that rate announcement means for consumers specifically, if you've got a variable mortgage or if you're looking to get into the market.
Mm-hmm. Yeah, absolutely. So what's happening right now is variable rate mortgages are pretty close to what fixed rate mortgages are right now. For quite a while, buyers, were able to kind of qualify at a lower qualifying rate based on the stress test if they went with the variable rate mortgage. But that gap has kind of tightened right now. So they're probably relatively close to 5%, which means buyers are getting stress tested at 7% right now when they're looking for a mortgage. And that's, of course, what's taking a lot of the demand out of the housing market right now.
What does that do to inventory then?
Yes, I mean, the interesting thing right now is inventory is not skyrocketing, which is usually what happens when demand plummets. I mean, when you look at other housing cycles, the first thing that happens is demand falls, then inventory rises, but that hasn't happened. And in fact, as we move towards the end of the summer, inventory levels relative to sales actually declined. So what's happening right now are a lot of sellers are taking their homes off the market if they're not selling. The ones that were desperate that sold in the spring sold, but a lot of the sellers now are not as eager, not as motivated, and a little bit more patient. And if they're not getting the price they want, they're taking their home off the market.
You mentioned that 20-year low when it came to home sales. We should say it's specifically with respect to Toronto. But you kind of dove into it a little bit there. What's the psychology now? Because we've heard from other, I guess, real estate analysts who've suggested that buyers are waiting on the sidelines, waiting for that bottom.
Yeah, I mean, that's been the trend certainly over the spring, just buyers moving to the sidelines. What we're seeing right now on the ground are more buyers willing to step in this fall market to start looking again. A lot of buyers kind of stepped out of the market, but we're seeing more buyers step in now. That might push sales up a little bit. But again, I don't think we're going to see any return to sort of the crazy markets of 6 months ago. We might see a little bit more balance and stability in prices as we move into the fall market.
You and I have talked before about ultimately what will put a dent into that housing market. Give us an update on it. We talked a little bit about inventory. Give us an update when it comes to, I guess, the regulatory side of things and permits when it comes to new builds.
Yeah, I mean, that's going to be, again, the supply side, the new builds. What we're seeing on the ground right now, of course, and this is typical in slowing markets, that we're going to be seeing fewer condo launches. Again, part of this is just a function of the fact that the new condo market, the new housing markets are seeing the same dynamics in the resale market, which is declining demand. And the declining demand is purely because, people can't afford today's prices at today's rates. So we're going to see sluggish sales on new construction. And again, I think dampened supply in a market where, quite frankly, we're not building enough homes to begin with. So the fact that sales are new construction are going to be slowing down is going to probably eventually put a little bit more pressure on the market in the future.
Let's talk about housing affordability and let's get into the rental market. How is that looking right now as we hit this fall period?
Unbelievably competitive. It's the complete opposite of the resale housing market. A lot of buyers who were potentially looking and moved to the sidelines just decided to rent, and rent prices are skyrocketing. They're above pre-COVID levels. There are bidding wars on rentals. It's very competitive. I mean, and part of this, of course, was due to a surge in demand as students were returning to universities. So this was probably going to ease up a little bit as we move into the fall market. But the past few months have been unbelievably competitive in Toronto's rental market.
Let's stay with housing affordability. The federal government recently making an announcement of $200 million funding for rent to own. Your thoughts on that model?
Yeah, I mean, unfortunately, these rent to own models, when you look at them, I mean, they tend to be models that do not actually favor the people who the government says they're trying to help, which are usually, lower income households trying to get onto the property ladder. They tend to be, predatory schemes, that effectively kind of prey on sort of households that can't afford a home, want to get into it. And when you look at their business models, are usually not very good for consumers, because a lot of them end up investing into these schemes, but ultimately when it comes down to potentially buying, they can't actually afford to buy and they end up losing part of that investment they put in. So it's unfortunate that they're going down this road rather than investing to make, renting an affordable long-term option for households. They're kind of pushing forward some of these rental schemes, unfortunately.
John, just before we let you go, a recent report out of TD suggested a 25% drop in real estate prices towards the end of the year. Do you see it that way as well?
Well, it's interesting because this was, a national forecast, and quite frankly, in Toronto, at least in the low-rise market, we're already down 25%. So it's certainly very possible to see the, national prices down 25%. Especially given that we're probably going to have more rate hikes, and the fact that it's, it takes quite some time for the markets to adjust to higher rates. So we're definitely probably going to see a little bit more volatility as we move into the new year.
Do you see that kind of pushing into that spring market as well?
Yeah, I definitely think so. And I think what we're going to end up seeing in the spring market is how much, how many sellers can hold on and how many investors, in particular the highly leveraged ones, can hold on to their properties. We haven't seen, and this is the interesting thing about this cycle, why inventory hasn't surged. We haven't seen much distress from sellers, which is usually what happens in these types of high hiking of interest rate cycles. We haven't seen that. We'll probably get a better lens of what that looks like in 6 to 9 months. But right now, sellers are kind of buckling down and holding on to their properties.